Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing mixed markets around the world. Europe is the standout, down pretty hard as Russia escalates the tensions in the Ukraine. Scott, do you think this is going to be something that we need to be concerned about in the coming sessions?
Well, it's everywhere in the news. It's every headline now that you had Russia playing military games, and they also had a group of soldiers seize a parliament building, and then you have, Kerry come out and say, listen, this is not Rocky IV, which I think was a great movie. But besides that, when tensions are come up between Russia and the U.S., it's always a little bit tricky, especially considering that our administration hasn't been as forceful as back in the day. Maybe we saw what happened with Syria and this and that. So with that being said, it could be something that continues to escalate. So that's why you see our futures down, not down huge like 20 handles, but down 6 to 7, and that also combines with the choppy action we've seen. So I'm not that surprised by this.
Okay, well, just because we like the movie doesn't mean we like it in real life, right?
No, not at all, not at all.
Well, you mentioned our futures are down. What levels would you say that we need to sustain to hold higher?
Well, on an active level, which most of us are, we wanted to see if we could hold higher and then break to new highs. And we haven't been able to break to new highs in the last 3 sessions, which, again, everyone's been talking about. I feel like this is the world of overemphasis. But that's what happens here in the new wave of social media. So you look here at the chart and you will see that you have a trend line that's been intact, that in the beginning of the year you had both of these break very quickly, but then we bounce back just as quick. And then recently, if you're trading for cash flow and you're trading for alpha, in here it's been pretty choppy. I know for me, I've been up a decent amount of money, and then if you're really long, you have those pull-ins in the afternoon, and they've been complicated to deal with, but whatever. And then if you think we're going to fall apart and you short, we bounce back. So with that being said, we'll see if we open below this 1840 and stay below it, because the 8 days right here at 1837. I say as long as we stay above 1837, I do think that the bulls don't have that much to worry about. If we were to close below this, then perhaps we could see a move to retest a 50-day at around 1817, where we would revisit. If we do go positive today, then I think here we are once again knocking on the door of the new highs.
All right, well, let's turn the spotlight onto high beta tech, where the action continues and remains mixed. Let's start with the strongest, Tesla, which we know has been a nice long setup for multiple months now, just yesterday announcing its convertible note. But at this point, the market seems to be bidding it up and absorbing it.
Yes, and I actually went out short Tesla because of the red dog reversal yesterday. When I heard the news of the convertible, I quickly said, I'm covering 2/3 here, not pressing, thank goodness, because then it went positive and now it's up $7, $8, and it could be a little complicated. But again, we'll see what happens here.
Right.
You look at the chart, you'll see what a move. If you're a bull here and you've been in this thing, congratulations. If you're a trader and you've tried to be long, which I've tried to be for the majority of this trend, and then once again for this trend, now look how extended we are from the 8 and the 21. The RSI is through the roof, but it's Tesla and everyone thinks it could just handle it. So we'll see what happens. This was your red dog reversal yesterday. It traded through 259.20, put a high in at 265. Some of us got short and traded it to the downside and made some decent money. Took out some because this type of pattern tells me, maybe we could see a little bit more. So tactically, I know it's Tesla and hard to do, being what we're going to have to deal with today. And now we'll figure out what happens. If this were to trade through 265, I will be out of my trailer and say, you know what, I lost on that end of it, and I will try that type of trade any given time, especially in such a extended stock. So here you go. This is the low, 247. Here is the high. We'll see what happens today. Maybe it goes from green to red one more time, and we could add a little bit versus that, and then I'll be talking about this on the virtual trade floor, because I'm going to have to navigate out, but I'm not going to be stubborn and just cost average up like some have done during this entire move.
All right, well, how about Netflix? We know this has been strong at this point. It's letting its moving averages play a little catch up. Will you be watching this one today?
Yeah, and there's really not much to do here. This, like most of the other strong stocks, just following the 8-day, and at times it's kind of tight and you can get a trade, but it's worth a look, especially when the futures are a little bit lower. Here is the trend that it's been following. Here is the day reverse, which was more of a setup type of day. When it was lower, went positive, and then traded through this. But now it's holding again. So maybe another day. It seems like every couple of sessions it makes a new high as long as it stays above this trend. I think that it's worth owning if that's what you want to do, or looking for a trade. So here is the low. If it's below this right now and reclaims 446, see if we can get another move. I know they're working on another series, this one with I think some comic book heroes.
And in similar fashion, Google following the 8-day as well.
Yeah, Google too. I feel like I haven't really been trading Google because these days are so small. So either you're sitting, you're holding, and that's what you're doing. There's no like tight pattern and then go after it. We saw a little bit more of that months ago. So you look at Google. This was when I think traders had actually a little bit more, I would say, good trades. All right, anyway, with that being said, here's the gap up right there, and here's your tight channel. So this is the type of day that traders like in Google if you're not just sitting in it. Happened again right here where it gets tight and expands. And ever since, it's really now just riding up and the days aren't so big and it's a little wishy-washy. So I would say if you're in this long as a swing trade, just stay with it. If you're looking for an active trade, there's not many big type days in here and it's not the easiest to navigate. Yesterday was down a little bit, so you have 213 and 207 as support now.
And now on the other hand, we have Apple, which has been weaker. Apple has its shareholder meeting tomorrow, so perhaps some potential catalysts could come out of it.
It's been just grinding, like you said. It gave you, at least it gave you a topping tail at 551. So if you bought it in the hole or you bought it when it went to fill the gap above 517, that was your signal. And if you look here, you'll see that here's a trend line right there, and that's where it reversed, a topping tail. Topping tails are a trader's friend. It tells you that a move like we saw from this Red Dog reversal at 495 or this gap up after they spoke about buying their stock ended. And then from there, I know we've tested a few levels. Here was a green day that got negated, another weekday yesterday. So maybe today, where you have the 200-day and the 150-day coming in, that could be some kind of support, and then you have 515.60. So if it opens, I think it's down $2-3 now. Nibble a little bit if it against the low, and then if it goes green, perhaps we get a tactical trade here. But this stock has still a lot to prove, and it's not best of breed, and we'll have to see some things out of that shareholder meeting that are exciting in order for this descending channel to break back to the upside.
All right, well, coming up, we're going to go in the trenches with social media stocks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with social media stocks, starting with Facebook, which has been very strong and is hanging above the 8-day. But was there something about it that signaled a composure change could be in the works, or did it just felt a little bit weaker than usual yesterday?
This much.
Okay.
That's what I'm hanging on right there. What you should be hanging on, or traders or investors, is the big macro picture, which has been very strong. Besides trying to be cute, like I'm trying to be cute right in here. Because if you look at the chart of Facebook, you will see, look at this cup and handle pattern. People love this pattern because this is an accumulation pattern. I know that there was a lot to prove within this, but institutions, whoever it was accumulating it. Then finally, when they proved that they can monetize search, it ignited above it. So if you were in here, congratulations. If you waited for the report and then it broke above resistance, boom, you've been in a great stock, great investment, you're doing well. You had one ascending channel like you had here that got broken to the downside, gave you a bit of a corrective phase before this Red Dog reversal into the 21-day. So some traders probably made some cute money short there, and investors that just said, okay, I'm sitting around, I'm waiting. They had nothing to worry about. So here we are now where you have a little bit of a topping tail, not extreme. You go to the daily, you will see if you have to almost use a microscope here where you haven't had really 2 red days in a row, and then yesterday it tried to make a new high and it couldn't, broke back below 71. Actually was allowed, they allowed it to break below or trade below a prior day low, and that's what you have here. So if this were to break below yesterday's low of 68.85, perhaps we finally see a little corrective activity, and if you're looking to be very active and very cute, which could make you ugly, you could try and be short there. I know for me, I've tried it the past few days and I haven't had much success. I'm a little short today. My stop's going to be definitely at these highs here if they decide to make it strong, maybe sooner. And if it shows relative weakness, perhaps add here for something to the downside. But I'm anticipating this trend has still been strong, and anticipating can get you in some kind of trouble.
All right, what about LinkedIn? It had that nice move that got sold into the upgrade. What level would you say that LinkedIn needs to hold?
Well, it just shows you can be tactical here. Yesterday we talked about the time at the Red Dog reversal around 185. That was nice and tactical, but after a big move to 10, 215, probably sell the upgrade. When the upgrade finally comes, it doesn't mean you just buy it. And if you look at the chart here of LinkedIn, you will see here is your Red Dog reversal. Here is where it proved that it's more than a feeble bounce, and then that was your move into the upgrade, right into the trend line. So it was a better sell than buy. Now you'll see if it could hold higher. Can it hold above yesterday's low of 211 for a little while and then maybe break this downtrend? That would be, I would say, constructive. And even if it came in a little bit more, maybe if it came in to retest these moving averages, I'd start moving up somewhere around 205. I kind of get my trusty little line here, and that line comes in right around there. So here is support 1, support 2. This would be that mark that should hold or has to hold for traders to get excited for maybe more upside.
What about Zynga? I know that you had been playing Zynga for a bit there. How's that playing out?
Playing out, there you go. That's like a Britney-ism. It's push out games. So with that being said, it's been acting very well. I've been sitting in this thing. It's been in my disclosure for weeks. You look at the chart here. Last year, we started talking about a treasures for trash trade. Here, you had your gap up, and from here, it's been actually following the 8-day moving average. Gave you an add right around here yesterday. It was also strong. You go to the weekly chart, and it's just starting to come out above like multi-year consolidation after its failure at the IPO. So here is 6-ish, which I do think can happen this year, and some out there think it might even go to 8. So let's see if we could trade around the core position here and not overtrade it.
All right, let's do some quick hits here. Real quick, how about First Solar, which we know just had its earnings miss. It opened at support and was able to come off that level, so could there be any opportunity here? Yes,
we talked about, is it going to open down and trend down all day, or is it going to open down and then fill some of the gap, and that's what it did, and that's what helped a lot of the other solar names yesterday. You look at the chart here, you will see here is that descending channel. Big move off of it. It opened here, closed there. So we'll see how long it takes to potentially fill this gap. Maybe an inside day or so, but if we get a few inside days, there could be a nice cash flow trade above 53.60 to fill this gap. And if it fills it quick, then you know that they want this thing higher and there's a better future. Maybe that was the worst quarter behind it.
What about BlackBerry holding above Tuesday's gap? 12% move in 2 days.
Very nice. And some people were like, oh, what's the matter with BlackBerry yesterday? I go, what do you mean what's the matter with BlackBerry? It just went from 9 to almost 1090.
Can't do it every day.
Exactly. Then everyone will be shorting it in a pain trade. Right. So I'd love to see some consolidation here, and it would make it easy for me to hold and maybe build back into a bigger size position if it could hold above 1020. You look at the chart here. This was your Red Dog reversal back here when I wouldn't look at it. And then this is when I started to trade it again. And you had a really nice move. So this fast, furious move told me that maybe it could be back in the game. And here was your tight pattern. Day 1, day 2, digestion still above the gap. It could even fill the gap a little bit. But I'd love to see it do some work into this area, maybe today even be a little green, and then at some point, not sure how many days it's going to take, but take out this 1090, and then if you go more to the weekly chart, which is a little bit more interesting, you could see that the next real resistance comes in at 14-ish. So I would go out on a limb and say I think this stock has 14 to 15 written in it, or maybe 13 to 14 written in, and from here, that's nice at some point this year.
Okay, and we also talked about a trade idea in Fusion.io, ticker FIO. Does it still look like it's setting up for higher prices?
I got to take a deep breath because I always add to my FIO and I always lose in it, and I apologize for that to everyone who's been doing that with me. So you look at the weekly chart, and it's still in a very big downtrend. You look at it here. Every time it's got here, it's failed. We have to see this break in order for this to act better. You go to the daily chart, you will see. It's trying to hold up. It's trying to round up. It's had some volume spikes. At some point, maybe it sticks, but it's going to have to really get like above 1130 and stay above it, and then it's got to deal with the 12-day. Not the 12-day, the 200-day and $12. So this is really just something to do, and I don't know why I gravitate back towards it, but we'll see. If it were to break below 1060, it'll be off the radar until until another time.
How about the banks? They were weaker yesterday and then turned and helped the market. What do you think this means for Bank of America, your old favorite today?
Well, yesterday all the banks were really weak when the market tried to be strong. So we're like, unless the banks turn, we're not going to get much power. Then the home builders came out with that strong number, and the market went, but the banks were still weak, and then finally they came back up. So if we look at XLF and Bank of America, you go first XLF, you'll see nice size move off the lows, but it's hovering lower versus higher like the S&P and versus through this like the home builders and the bios and tech. It did hold this support, so I'd say as long as XLF holds above 2137-ish, it could go sideways and then at some point get better. As you asked with Bank of America, it's still holding this support. It came off of it, still has a decent amount to prove here, still hasn't broken and resolved this channel or trend to the upside, so I'd be very small or light until that happens and until we see a true signal here, which you did see back here, which turned into a really nice move after a multi-month consolidation. So look how long this lasted. So don't get too frustrated and overtrade yourself because this isn't as long yet.
Well, also clearly there's lots of movement across the board, whether we're talking long, shorts. What would we be focusing on today?
My first focus is to see how I can maneuver my way out of my leftover Tesla short, to see whether I could add to it and actually turn it into a moneymaker today, or I just get out of it and say, okay, I'm done with that for a while. I also want to see how we handle the upper area of support. 184.20 is a level in the spiders, 1835, 1840 in the SPX. If we could reclaim that today, then I do think that we continue to just be choppy and sideways, and then at some point try at 1850 again. We've seen stronger sectors like the home builders, the bios, technology above already the prior pivot, but then you have some of the weaker sectors. The Dow has been a little weaker, the banks have been a little weaker, so we need to see how it all plays out. But overall, there's been a lot of movement in a lot of select names, and the traders that are having success, that's success, that's the word that I was looking for before. Traders having success are really focusing on individual names that have the best patterns, that break out on decent volume or are weaker to short, and they're not adding too much into a strong move. They're actually taking the trade, and if you're in the money short, they're not pressing, they're just saying, okay, I'm going to take my money short and figure out maybe how to fade a bounce and not look for too much.
Right. You don't want to forget a word like success, Scott.
Yes, that's true.
All right. Well, with that being said, happy trading. Have a great day.